Hi, welcome to the Northern Virginia MarketWatch, brought to you by RBI, Real Estate Business Intelligence, an MRIS company. We're going to dig into the most recent numbers from the Northern Virginia housing market, which includes the counties of Arlington, Fairfax, Fauquier, Loudoun, and Prince William, as well as the cities of Fairfax, Falls Church, Manassas, Manassas Park, and Alexandria. Let's jump right in. Economic recovery loses steam. Housing demand in a slump. Tax credit leaves mess in its wake. We're bombarded with headlines like these every single day. Some have merit, some don't. The truth is, the economy is currently driving the housing market and not vice versa. In their latest effort to resist sweeping national trends, local pending sales posted a less than ideal, but still not as bad as the rest of the country, 10.7% dip since July 2009 to land at 3,074 purchase agreements signed. Several regions across the states are suffering from 40% declines in buyer activity, but not here. It seems that such a serious decline wasn't on the menu for July, and the good news is we have a shorter path until we're back in positive territory. Since buyer activity thankfully outpaced seller activity, inventory levels decreased by a significant 10.5% as active listings stepped down to 10,090 units. Prices really lucked out, which likely reflects the mix of homes that closed during the month. The July median sales price of $380,000 was a substantial 10.1% increase from last year at this time. Expect the market to continue its ascent in the coming months, assuming buyer activity is revived and current inventory is at least partially absorbed. Negotiations continue to move back toward the seller's favor, albeit quite slowly. The July percent of original list price received at sale increased 0.5% to land at a very high 97.1%. Rising prices and negotiations leaning toward the seller's favor doesn't sound like a bad time to sell. Typically, the housing sector generates a number of corresponding construction, manufacturing, and other skilled labor jobs, which in turn fuels economic growth. These jobs then return the favor by lowering unemployment and creating new demand for housing. And then there is now. Job churn simply must fill the demand gap formed by the tax credit before buyer activity returns to the market. The Fed's August 10th announcement that it will be purchasing Treasury bonds is a clear indication it wants to maintain interest rates at historic lows, an important driver of purchase activity moving forward. To sum up, the housing market is really trying to hold its ground until the job situation improves. Only after widespread private sector hiring will demand be restored to the market and prices continue to stabilize. Until then, it's a hurry up and wait game. That's the Northern Virginia Market Watch for this month. Tune in next month for the latest.